Hey all, welcome to ShareTrek. This is Raj here. Friends, I'm blown off by the capability of Gemini, especially the analytics engine, and I'm going to give you a demo of that. So this video is going to be multi-purpose video. First of all, I want to showcase how amazing Gemini's AI model is. You can call it Gemini or Gemini. The AI model is absolutely fantastic. They have got multiple models and I've selected the one that is for analysis. It's mind-blowing. It goes through a whole lot of process. It doesn't give you an answer immediately. It searches for all the information that it needs until it reaches a point of marginal returns. At that point it stops and then compiles a report. Okay, that's the first part. The second thing is, I want to again showcase how Tesla is so overvalued. I'm comparing it with Nvidia today, and I'm going to show you some matrices including CEO compensation, per capita employee gross profit and net profit, those kind of numbers to compare these two companies, and also looking at their prospects. And then I'm going to do a thought exercise at the very end. So watch till the end and you'll have a revelation about the way I feel about Tesla. Tesla is very overvalued. And with that said, let's get started. Well, here I am in Google Deep Research. As you can see out here, the model that I have selected is Deep Research model, and I've given it a prompt. I'm just going to blow up this prompt so that you can see it clearly. I've asked, please get me the following information for Tesla and Nvidia. I've requested CEO compensation, gross margin, net margin per employee, number of employees, product lines, competitors, and market share. And I've asked it to provide a response in a table format, and at the end to provide an analysis of which is better for the investor. So I have given the whole heavy workload which I would have done directly onto Gemini. And I was very impressed with how Gemini responded, because I'm going to show you what it looks like out here in terms of the reaction. So the first thing it said is, here is a research plan. So it gave me a research plan where it said that it's going to go and look at various websites, including Tesla and Nvidia investor section websites and other areas in order to collect all the information. It also mentioned what information it's going to collect. And then it will analyze reports, and then it will create the report, and it says it'll be ready in a few minutes. And I think it took it around 5 or 6 minutes to do this whole thing, if I'm not mistaken. I didn't put any stopwatch or any timer onto it. And while it was doing that, it also gave updates on where it has reached in each stage of its research. So I have the completed research out here, and this is the output that it gave me. And I have this in front of me here. Let me export this to docs and then load it up, because when it is exported to docs, it will be a big size file where we can see it much better. And I'm going to blow this up a little more so that you can also see it at your end on the screen. So it started off by giving an executive summary, Tesla versus Nvidia, a comparative analysis for investors. It says both stand as titans in the modern technology landscape, despite the distinctions. Tesla, a pioneer in electric vehicles and sustainable energy solutions, etc., etc. Now, these are all the common things that everybody understands. So I'm going to skip through that. Then it gave a company overview of Tesla, business model and mission, and it made a distinction. Unlike traditional automotive manufacturers, Tesla primarily utilizes the direct-to-consumer sales model, marketing and selling its vehicles through company-owned stores and galleries, and this approach allows for greater control over the customer experience and data collection. Then it talks about the key product lines that I had requested. So it gives me all of those product lines. I don't want to go through this because you guys are already aware of it. Then it talks about the primary market. It says Tesla's primary market span North America, Europe, and Asia, with a significant presence in China. These regions represent key areas for electric vehicle adoptions and the deployment of renewable energy solutions. However, competition and regulatory landscapes vary across these markets, presenting both opportunities and challenges. And friends, don't worry, I'm going to upload this to the sharetrek.com website, and I'll put a link in the description of this video, so that if you click that link, you will be directly on this document and you can read it at your own leisure. I want to keep this video short, so I'm not going to go through each and every paragraph. Then we come to Nvidia, where it says Nvidia operates a fabulous semiconductor company primarily focused on designing and supplying graphics, etc. And key product lines, it talks about GeForce, GPUs, etc., Blackwell, and all that stuff. And it talks of primary markets. Nvidia's products cater to a diverse set of primary markets, including gaming, which remains a significant revenue driver, data centers fueled by explosive growth of cloud computing and AI, professional visualization, serving industries requiring high-end graphics capabilities, and automotive, with a focus on powering advanced driver assistance systems and autonomous vehicles. Nvidia holds a particularly strong position in data center GPU markets. So remember, they are also into autonomous vehicle related driver assistance. So that's the area of overlap. And in terms of insight, it says Nvidia's business model is highly scalable due to its focus on design rather than manufacturing, and so on and so forth. You can all read this from the website where I'll upload this. Now, it has done a comparative data analysis. For CEO compensation, you know that $55 billion compensation for Elon Musk is still in the courts and on and off. It's been very controversial. For Nvidia, we don't know what Jensen Huang is going to get. Gemini searched a lot, but it couldn't find any definitive information. So we'll consider this to be a wash. Then you are looking at gross margin. FY 2024, 17.9% for Tesla, 72.7% for Nvidia. And net margin was 7.3% for Tesla and 48.8% for Nvidia. And now I've asked for a margin per employee. So net margin per employee for Tesla is $55,704, whereas for Nvidia, it's almost $1 million per employee. Now, in terms of number of employees, Nvidia has got only 29,600 employees, whereas Tesla has got 125,655 employees. And in terms of product lines, you can see there's a diverse product line as far as Tesla is concerned. But when it comes to Nvidia, it's synergistic and it's a smaller list of product lines. And for competitors, the competitors for Tesla are all the EV companies who are manufacturing vehicles. Ford, GM, Volkswagen, BYD, NIO, Rivian, Lucid, etc. Whereas if you look at competitors for Nvidia, it is AMD, Intel, and they're also saying that Alphabet, Amazon, Apple, and Microsoft will manufacture in-house chips, and those could be competitors. And as a matter of fact, Alphabet has made its own quantum chip, and they also have their own AI reasoning chips. Microsoft has also done the quantum chip. Amazon has done its own quantum chip. So they're all getting into the area. And I don't think Nvidia has yet made any quantum chips, but they have to get into that area very quickly in order to maintain their leadership. So that said, market share, global EV market, only 18% is with Tesla. Remember, Tesla pioneered the EV market and they should have held a bigger portion of the market, but they are slipped down to 18% globally. And within US, they are just 44%. US is their home turf and they are 44%. Whereas if you look at Nvidia, they have 82% of the desktop GPU market and data center market and GPU, that is 92%. So they are still leaders in their area, hand over fist above any of their competitors. So this is a qualitative difference between Tesla and Nvidia. And why did I select Nvidia? Because the high multiples of 119 PE for Tesla is being justified by saying they are not a EV company, they are an AI and robotics company. And I would say that Nvidia has done more for AI and robotics than Tesla has ever demonstrated, right? and especially with Omniverse and other platforms, I think NVIDIA is way ahead. Now, having said that, let us go for a further breakdown. So this is the detailed breakdown and comparison of each metrics of CEO compensation. I'm going to skip this because despite all of this amount of text, there is no actual number available out there. So I'm not going to talk about that. I'll consider that a wash. I'll assume both are being paid equally. Because if you were to look at the margin per employee, like with less number of people, Jensen Huang is generating more income per employee than Tesla. So I am thinking that NVIDIA CEO should be paid better than Elon Musk. But that's my opinion. Let's go ahead and have a look at gross margin. So in terms of gross margin, Tesla reported a gross margin of 17.9% for the full year 2024. Specifically, its automotive gross margin profit, including regulatory credits. This includes regulatory credits. With regulatory credits, they stood for 18.4% in the same year, which is a decrease from 23.3% in 2023 in the fourth quarter of 2024. Now, the PE for Nvidia was reduced because they said the margins are dropping and it may become zero, so we are going to reduce the Nvidia PE. But look at Tesla. Tesla is also losing margins, but it's losing significant margins. It's come down from 23 to 18.4, right? And then the next one, it says, in stark contrast, NVIDIA achieved a gross margin of 72.7% on GAAP basis, 73.8% on non-GAAP basis. For the fourth quarter of the fiscal 2025, NVIDIA's GAAP profit gross margin was 73%. And these exceptionally high margins underscore NVIDIA's strong pricing power in the market. And remember, Tesla does not have a strong pricing power in the market. They are giving discounts, they are giving low interest rate loans and things like that, right? So there is pricing power with NVIDIA and Tesla doesn't have that pricing power. Then it says Tesla as a manufacturer of physical vehicles and NVIDIA as a designer of high value semiconductor products with integrated software are two distinct kind of companies. NVIDIA's ability to command premium pricing in high demand markets like AI allows for substantial profitability per unit sold. And the employees in NVIDIA are high value employees, high productivity, and that's not the same case with Tesla because they are doing manufacturing work. And now in terms of net margin, Tesla's net profit margin for 2024 was 7.3%, a notable decrease from 15.5% in 2023. This decline is further evidenced by the fact that Tesla's GAAP net income fell by 53% from approximately 15 billion in 2023 to 7 billion in 2024. Friends, how can Tesla command 119 PE while NVIDIA is just about 40? I mean, it's a matter worth thinking. Just look at the facts out here, right? Now, let's go further. NVIDIA's net income was 29.760 billion. And they have been increasing their net income and they have been doing very well that way with new models and advanced bookings and things like that. Net margin per employee, to calculate net margin per employee for Tesla, we divide the net income of 7 billion by the number of employees, which is 125,665, resulting in approximately 55,704 per employee. And this figure indicates the average net profit generated by each Tesla employee during the year. And for NVIDIA, you divide 29.760 billion. Even if you look at just the net income, Tesla has a net income of 7 billion. NVIDIA has a net income of 29.760 billion. And that is huge. And it has only 29,600 employees as compared to 125,665 employees for Tesla. And this gives you a margin of approximately $1 million per employee. So that's the net margin per employee. So this is significantly much better. And let's proceed further. I'm going to skip the product lines area. We all know about it. One of the big things out here is the CUDA is moat around NVIDIA. So for those who are not technical, the understanding of CUDA is that It's a layer which helps other languages to communicate and make the GPU do the work. For example, there are legacy languages like C language, C++, and then other languages like Python and all, in which people do programming. And all of those programs can run on top of CUDA, because CUDA can then translate that and distribute the work into the GPU and get it done efficiently. Nobody else has got similar layer around their GPU, and CUDA is designed for Nvidia GPUs, so somebody else cannot just take it and wrap their GPU with CUDA. So this gives Nvidia a very, very strong sticky moat, and that's a big point, whereas Tesla doesn't have any such thing. Even their Powerwall right now, because of competition, they will probably have to share their Powerwall with everybody and get some revenue out of it in order to stay afloat. Now that said, in terms of competition, Tesla faces a dynamic and increasingly competitive landscape in electric vehicle market and competes with established global automakers like Ford, General Motors, and Volkswagen, all of whom are making significant investment in electrification. Friends, there was a time when Tesla was the only electric vehicle available, rest was all hybrid. The best we could get was hybrid. Now we have got Kia, we got Hyundai, we got Audi, we got other companies also like Mercedes. Everybody has got a EV with them. Even Subaru has got an EV. So everybody has come into the fray, and the global share of Tesla in the EV market has shrunk to 18%, right? And whereas Nvidia's primary competitor in graphics processing unit is AMD. Nvidia PE is just 40. AMD's PE is almost around 99, if I'm not mistaken, at this point of time. I think AMD needs to fall further, or Nvidia needs to go up. If you look at the valuation for Tesla and if you look at the valuation for AMD, I would say that probably Nvidia has to go up, AMD has to go down a little, and Tesla has to go down. So Tesla and AMD have to go down and Nvidia has to come up, and they meet somewhere in the middle. That's the way I would look at it from my personal perspective. Next, if you look at market share, Tesla's global market share in battery electric vehicles was 18%, a slight decrease from 19% in 2023, indicating increased competition in the United States. And then coming into United States, Tesla held 44% of the electric vehicle market in the fourth quarter, a figure that has been declining as more competitors enter the market with compelling EV offerings. And then we have another statement says, while Tesla remains a market leader, its dominance is being challenged. Nvidia enjoys a significantly stronger market share in its key areas of focus. In the discrete desktop GPU market, Nvidia held 82% share in the fourth quarter of 2024, with AMD holding the remaining 17%. Intel, the original microprocessor company, is nowhere to be seen in this process, right? That's why their shares are in the doldrums. Nvidia's dominance is even more pronounced in the data center GPU market, where it commanded a 92% market share in 2024, highlighting its near monopoly in this critical sector, driving artificial intelligence advancements. And this high market share provides Nvidia with substantial pricing power and a strong competitive advantage. So friends, this is what I'm looking at out here from Gemini. Can you imagine how much work Gemini has done in order to bring all this information and provide it to us? And for me, this is a jumping point for my research, and I'll have to validate quite a few things. But the objective of today's video is to show you the capability of Gemini and the capability of Google, Alphabet, how good they are and how much AI LLMs have all advanced. So that's what I'm thinking. Now, in terms of investment analysis, it gives us a strength and weakness of Tesla along with opportunities. It's basically SWOT analysis out here, and it does the same thing for Nvidia. It does the strength, weaknesses, opportunities, and threats. I will allow you to read all those things. I promise to put this up on the website, so don't worry about that. And then it's doing a comparative investment assessment. It says comparing Tesla and Nvidia as investment opportunities requires a careful consideration of their respective growth potential, risk profiles, profitability, market valuations, competitive advantages, and leadership. Nvidia's exposure to the booming AI market presents a particularly compelling growth narrative. The demand for its high-performance GPUs is expected to continue its exponential rise, driven by advancement in cloud computing, machine learning, and AI applications across various industries. Remember, guys, NVIDIA is across various industries. It's in genomics, it's in factory designing, it's in robotics, it's in protein discovery. You name it, everywhere it is there, with leading industry participants collaborating with it. Even in automotive and driver assist technologies, it's already there. And then it's expected that its high performance GPU will continue to have exponential rise. And then we are looking at, in terms of risk profile, both companies have inherent risk. Tesla's reliance on manufacturing makes it susceptible to production challenges, supply chain disruptions, and cyclical nature of automotive industry. Nvidia faces risks related to semiconductor cycle, increasing competition in the AI chip market, and geopolitical factors, particularly concerning exports to China. However, not only exports to China, I would also say they have factories in China, right? So the China production may probably help them skirt the tariffs. But the fact that there's an entire factory within China under the control of the Chinese government means that if hostilities happen between China and the US, that factory has a lot of risk out there, right? So we have to keep that in mind. Nvidia faces risk related to semiconductor cycle, increasing competition in the AI chip market, and geopolitical factors, particularly concerning exports to China. However, Nvidia's dominant market share and technological lead in key areas of AI provide a stronger buffer against competitive pressures as compared to Tesla in the increasingly crowded EV market. I'd also like to add that the tariff issues will also affect Nvidia, and the China factor will also affect Nvidia in two ways, because Taiwan is where TSMC has maximum production, but that is being mitigated by creating TSMC factories within the United States. That's also being mitigated by taking some fabrication facilities and subleasing it from Intel. So those activities are already going on. The second aspect is that even with all the hostilities, like in the past, a kind of controlled GPUs where the capacities are throttled can still be exported, and it can find overseas market. So to that extent, I think Nvidia can mitigate some of those risks, but the risk still remains. If US becomes a fortress US and tariff war gets really bad, then all the markets will get saturated and it will be very difficult. That's a big risk, not only for Nvidia, but also for Tesla. So profitability and margins are a key differentiator. Nvidia's significantly higher gross and net margins demonstrate its strong pricing power and efficient business model. These robust margins provide Nvidia with greater financial flexibility for research and development, acquisitions, and potential shareholder returns. Tesla's margins, while improving over time, are considerably lower and more susceptible to factors like pricing strategies and production costs. And then we have market valuation. Nvidia stock often trades at a premium, reflecting its high growth prospects in the AI sector. While this high valuation carries a risk of potential corrections, it is supported by the company's consistent, strong financial performance and future growth expectation. Tesla's valuations has also been historically high, driven by its disruptive potential in the automotive and energy market, but its recent performance and increasing competition warrant a more cautious assessment. So there you have it, my friends. I think that in terms of conclusion, what Gemini says is that based on the comparative analysis, Nvidia appears to be a potentially better investment opportunity compared to Tesla at this juncture. So it has also given me all the references that it had gone through in order to do this analysis. So friends, this thing totally blew my mind. I was just thinking, let's do a test drive of Gemini and see how its analysis module is doing. It was fantastic. And what I showed you is just the end result. But when I was going through the process with Gemini, I had ongoing feedback from Gemini telling me which website it is looking up, what information it got, what information it is still searching for, where it's going to look at, and it gave me a running commentary of everything. And then in the end, it said that I have searched everything that I could. I've got all the information that I could possibly get, and based on that, I'm going to do an analysis and I'm going to provide a report. And then it provided this report. This is the first cut. I have not even asked it to refine anything. Now I can go back and ask it to refine it by creating separate tables, or ask it to drill down on specific aspects, and it can go and do those things for me. So these kind of capabilities earlier would have requested a lot of research assistants doing small pieces of work here and there, and all of them would be using computer and internet, doing manual searches, doing cut and paste, and then doing comprehension, creating Excel tables and all that stuff. It's all gone. It all was done in 6 minutes flat, approximately, to the best of my knowledge. And I had that here, and I wanted to show that to you. Now, coming to the conclusion. Well, friends, what I have done is I bought out all those PEs from my iPhone. So you can see here for Google, our PE right now, as of today's market price, is 20.12. For Nvidia, it is 39.78. For Tesla, it's 110.83. And for AMD, it's 103.95. So I was a little bit off with Tesla and AMD PEs. But overall, if you look at it and look at what Nvidia has got to offer and what Google has got to offer, then the question becomes, are Tesla and AMD overvalued, or are Google and Nvidia undervalued? Or maybe that Tesla and AMD are a little overvalued and Google and Nvidia are a little undervalued, in which case Google and Nvidia have to go up, Tesla and AMD have to come down and meet somewhere in the between. What I'm not suggesting is that all industries should be treated the same and given the same PE. But from an investment perspective, if I'm looking at these 4 companies, where do I want to put my money? I would rather put my money on Nvidia and Google. So that's the way I'm thinking about it. Well, we are at the end of the video now. So the question that I promised, the thought exercise question. Well, I'm thinking, if we were able to exchange CEOs for these 4 companies, for example, if we were to take Jensen Huang and make him the CEO of Tesla, and take Elon Musk and make him the CEO of Nvidia, would you look at the companies the same way? Or would you probably put Sundar Pichai on Nvidia and Elon Musk on Google? Just do the thought exercise and let me know whether the companies are being valued based on their CEOs, or there is some other factor at play. We are trying to get to the bottom of why Tesla has such a huge multiple and AMD has such a huge multiple when compared to really good companies which are potentially their peers. So friends, I would request you guys to also give Gemini a test run, and I'm going to put the link for this detailed report, and you can just click on the link. It will take you to our sharetrek.com website, exactly into the page where this will be. And I would like to hear your feedback on what do you think about my analysis, what do you think about the capability of Gemini, and what you thought about the report once you had a look at it. Did it change any of your original thoughts? And if so, just put the comments. I'm always happy to see what's in your mind. Thanks and have a great day. Bye for now.